Good evening, students. I'm C. Ankit Sharma, your income tax faculty for the session. And today we will be discussing the provision of advanced tax, TDS, and TCS. So it's good to see you again. And I believe you all are working very hard, studying very hard to achieve the goal of your life, that to become a chartered accountant as soon as possible. So I believe you must have gone through with the provision of deductions under section 80C to 80. So I guess that almost 75% of your syllabus has been completed. In these last virtual classes, you must have gone through the basic concept, residential status, then heads of income, then set of provision, clubbing provisions, and deductions concept. Now, three more chapters are there, and that is one that is called advanced tax, TDS, TCS. After that, there's a procedural aspects of return filing, and then computation of total income and tax liability. So let's take the query. Okay, Astha is asking, sir, in section 80 QQB, if there are three joint authors, then 3 lakh limit will be divided between them, or both will get 3 lakh limit. So Astha, that is a deduction question. But let me tell you, under section 80 QQB, the deduction is per person, not per book. So if there are three joint authors, they separately can claim 3 lakh rupees each. Okay. So good evening, Shagupta. Good evening, Rajveer. Good evening, Soumya, Krishna, Almas, Tanu. Astha is again asking, casual employee will not get 80 double J double A deduction even if employed for more than 240 days. Yes, they cannot get the deduction if they are casual worker. Jayendra Kokal is asking, for son's wife, substantial interest provisions not applicable. Yes, for son's wife case, substantial interest provisions not applicable. Good evening, Pavan. Good evening, Sahil Kumar. Good evening, Yash. So today we are going to discuss the provisions of advanced tax, TDS, and TCS. Very interesting and very important also for the purpose of your examinations. Jainder asking, in partition of HUF, only spouse is mentioned. Yes, only spouse part is going to be clubbed. Son's wife part is not going to be clubbed. If cross transfer is applicable, then gift provision will not apply. So if gift from one person to another person, and if the gift provision is applicable as per income from other source, then that is going to be applicable. So let's start today's class. But before that, as usual, let me share with you thought for the day. And you can see it is dream it, then plan it, then do it, and then you will get it. So of course, whatever is your goal, first of all, you have to dream about it. You have to think about it that, yes, I am going to be like that, or this is my goal of my life. Then the second step is plan it. You have to plan accordingly. How much time you will study, how you will cover your course, how you will complete your syllabus within a time, how you will go for your MTP, RTP, etc. You have to plan it accordingly. How many times you are going to revise it. And then you have to work on it. That means do it. Then do it accordingly. Only if you are dreaming it, you cannot be whatever you have planned. And if you are able to do all these things, dream, plan, and do it, definitely you are going to get it as soon as possible. Okay. So that was thought for the day. And now we are going to discuss the provisions of today's chapter. And there are three concepts like TDS, advanced tax, and TCS. So let me tell you initially, what is the meaning of this TDS concept? The provision we will discuss later, but let me tell you the overview. The TDS concept, the advanced tax concept, and the concept of TCS. In charging section, you might have remembered that in the basic concepts topic, charging section 4 says that income of previous year is going to assessed in next year, and that is called assessment year. So the previous years for your examination are 24-25 and assessment year is 25-26. So it makes us feel that whatever you will earn in this time duration, you are going to pay tax on that in the next year. Charging section explain this concept like this. But that's not complete true. The income is going to be assessed in the next year. But that does not mean the collection of tax would be only in the assessment year. So the collection of tax would be in some cases in this previous year only. Let me tell you an example. So you would be able to understand the concept of TDS, advanced tax, TCS. Suppose there is Mr. A who is earning salary income of rupees 10 lakh, whether it's salary or business income, suppose. And he is under optional tax regime. He opt out of default tax regime. So for 10 lakh rupees, the tax liability would be around 1,12,500 rupees. If he is a resident less than 60 years of age, then the approximate tax liability would be 1,12,500. Now we are talking about previous year 24-25. So he is going to earn this income in previous year 24-25, and that income also going to be earned every month. Like in April, he earned suppose 1 lakh rupees. In May, he earned 80,000. So on. But suppose the total earning is 10 lakh rupees in a year. And now what will happen? The tax of this 10 lakh rupees is going to be received by the government in the next year, that is called assessment year. At the time of filing of return of income, that the date would be 31st of July, or in some case that could be 31st of October. So whatever income Mr. A is earning in previous year, government is going to recover the tax almost after 1 year of that income. So government needs to wait for it. So government decided, why not? We should collect this tax in installment in the current previous year. So to collect this tax early and do not need to wait up to the July or October, government decided some collection of tax concept. That could be, you can say, pre-collection of tax or kind of an advanced collection of tax. So government decided we should collect this 1,12,500 what we are going to collect in July or October, almost after 1 year from this date of earning. Suppose something is earned in April. So the April income tax you are going to receive almost after 1.5 years. If you are earning some income in May, then you are going to receive the tax almost after 1.5 years. So to early collection of this tax in installment, this concept of like TDS, advanced tax, and TCS has been applicable. Now government say, if this 1,12,500 would be your tax liability, let's say in April we are collecting 8,000 rupees as TDS. In May, you need to pay suppose 7,000 as TDS or advanced tax or etc. So there would be the benefit of both person due to this applicability. First benefit to the government, government will collect this tax or some amount of this tax early, 1 year before or the time of earning of income. And the burden of paying this 1,12,500 rupees at once by the assessee, if this tax collection is not there, then assessee needs to pay 1,12,500 at once at the time of filing of ITR. So that could be a huge burden on assessee. So what we are doing, we are collecting this amount kind of a monthly installment as per the provision what we are going to discuss. So suppose as per monthly installment, the total amount paid by the assessee, suppose 1 lakh rupees. Now, at the time of filing of ITR, if it is taxes 1,12,500 and he has already paid TDS of 1 lakh rupees, then he needs to pay only 12,500. So this will reduce the burden on the assessee also. So this is beneficial to both the parties. Government will collect the tax. They will not wait for 1 year or more for this collection of tax. And of course, the risk of not collection also reduce, because if you have already need to pay tax monthly, then a certain amount of tax will be received by the government early in the previous year only. And the benefit for the assessee is this: if he'll pay such amount of installment as a tax in previous year, at the time of filing of ITR, the burden would be definitely reduced. So this, for the purpose of this early collection, the concept of TDS, TCS or advanced tax has been introduced. Okay, we are having various provisions, multiple provisions, multiple conditions for these cases. Now we have to understand what is the difference between in these three collection of tax. So there are types of collection. Whatever would be your tax liability in future, that is going to be collected by the department by these four collection types. One is TDS, that is tax deducted at source. One is advanced tax. One is TCS, tax collection at source. TDS is on the basis of some specific source of income. So there are certain specific source of income. If you are earning them, so at the time of earning, you have to pay a certain amount of tax in advance, like salary income, like commission income, like contract income, etc. So there are a list of income. If you are going to earn those income, then a certain amount of tax need to be deposited by the payer to the government on your behalf. How this is going to be happen, how this is going to be done, that we are going to discuss one by one. The applicability of advance tax is on the basis of estimated tax liability. So if your estimated tax liability is 10,000 or more in a year, then you need to pay that tax as per advance tax provision. So what are those provisions? When do we need to pay that advance tax? How we need to calculate our estimated tax liability? That we will discuss under advance tax concept. The TCS on some specific transaction base. So if you are going to undertake some specific transactions, purchase of motor vehicle exceeding 10 lakh rupees, etc., foreign remittance, etc., then on such transaction, you have to pay a tax, that is tax collected at source. There are some tenders also on which you have to pay the tax. So you can see all of these three things are types of collection. Out of these types of collection, they all need to be paid in previous year. So if you are earning some specific income, if those income has been included under TDS provision, you have to deposit a TDS amount in the same previous year. If your estimated tax liability would be 10,000 or more, then you have to pay that tax in advance as per advance tax provision at a specific dates, and a specific percentage has been mentioned. And if you are undertaking certain transaction on which TCS provision has been applicable, then you have to deposit a TCS also. So all these three types of collection need to be paid in previous year. And if anything balance has been left, suppose my tax liability was 1,12,500. Suppose, out of which I have deposited TDS 1 lakh rupees. No advance tax applicable. Or suppose I have deposited TDS 1,08,000 rupees. So balance is 4,500. And suppose that 4,500 has not been paid as advance tax or TCS. So whatever would be your balance tax, that needs to be collected at the time of filing of ITR. So when you will file your ITR, this balance tax need to be paid as self-assessment tax. So this self-assessment tax provision is going to be discussed in next chapter, that is filing of ITR. Because this is not advance payment of tax. This is the tax we need to pay at the time of filing of return. And that would be the balance tax. So if any tax which has not been paid via TDS, advance tax or TCS need to be paid as per self-assessment tax. So technically this chapter which covered TDS, TCS or advance tax provision talks about the advance collection of your tax which is going to be paid in the next assessment year. Now there could be one more chance. Suppose your tax liability is 1,12,500 and you have paid TDS or advance tax or TCS 1,20,000. Excess payment has been done. Suppose if excess payment has been done, then what will happen? The excess payment is going to be refunded to you. So if there is tax payable, then you had to pay it as self-assessment tax. But if excess tax has been paid, that is going to be refunded to you also. So advance tax, TDS or TCS are no new taxes. They are actually the part of income tax. But these are types of collection of income tax by various concepts, you can say. As TDS is on the basis of a specific source of income. Advance tax depends upon your estimated tax liability, and TCS on some specific transaction. So this chapter, we are going to discuss all these concepts. So I just want to clarify that what we are going to discuss, these are types of collection of taxes. The reason, the logic behind it, I have explained it to you because government do not want to wait for the tax collection till the time of filing of ITR. So they want the collection of tax in the previous year also. So they will have tax, and that tax they can utilize for running the country. We have discussed this thing in the starting of first day of our lecture in the basic concept. Why government needs tax? Because they need to run this country, the infrastructure, etc. So they need that the cash flow, they do not want to wait at the end of the filing of ITR. So they need to collect that tax from the previous year also. I hope it's clear, the concept of these things. Let's move on to the notes part. So that was the TDS. What is TDS? How TDS work? How to pay, etc. That we are going to discuss one by one. The TCS are some transaction-based tax collection. Okay. What are those transactions, etc. That is going to be covered in this chapter. And advance tax, how we need to calculate, what are the dates, what are the provision, what are the concept. That is also going to be undertaken in this class. Now the chapter overview, we are going to discuss these things. Tax deduction at source. So we have to understand what are those incomes. This is income specific. So those incomes on which TDS provisions are applicable. We have to find those income. When those provisions are going to be applicable, there are certain limits we have to learn. We have to remember that up to some specific amount. If that amount has been exceeded, then only TDS concept would be applicable. And there are more conditions. Advance tax liability, when arise, how to compute, and same in case of tax collection at source. Let me give you a simple example of TDS. Suppose there is Mr. A. He is a payer. Fine. And Mr. A pays some amount to a payee, that is Mr. B. Suppose the amount is of 100 rupees. He is paying 100 rupees to Mr. B. And suppose this is a payment of commission on which TDS provision applicable. I'm just trying to explain you how this concept work. So suppose on this 100 rupees commission, TDS provisions are applicable. And the government says the TDS rate would be 10%. Then how this provision will work? Now what will happen? Mr. A will pay only 90 rupees to Mr. B after deducting TDS of 10%. So TDS would be 10 rupees. So Mr. B would get 90 rupees from Mr. A. What will be done with 10 rupees? Now Mr. A responsibility payer needs to deposit this TDS. Mr. A needs to deposit this TDS to government. That means income tax department. On behalf of Mr. B tax. So Mr. A will deposit this TDS of 10 rupees to the department, and the PAN number of Mr. B would be mentioned. It would be written that this is the tax of Mr. B, not Mr. A. So this is the tax of Mr. B, not Mr. A. But the deposit liability is upon Mr. A. So payer will deposit the TDS of payee to the income tax department. Now what will happen? The tax of Mr. B of 10 rupees has been received by the income tax department. Now what will happen? When Mr. B is going to file his return of income in the assessment year, so whatever would be his total income, we have to calculate the tax thereof. And whatever would be the tax liability, from that tax liability, this TDS which has been deposited by Mr. A on behalf of Mr. B is going to be reduced. And the balance would be either tax payable, or it could be refundable, or it could be zero. Suppose the tax is 12 rupees and TDS was 10. Then Mr. B needs to pay 2 rupees as self-assessment tax. Suppose the tax liability was 7 and TDS was 10. Then 3 rupees is going to be refunded to Mr. B by the income tax department. Suppose the tax liability was 10 and the TDS was also 10. Then there is no refund and no tax liability would be there. So how this process work? Like this process work. The TDS concept. Now, advance tax is on the basis of some estimated tax liability. So, if your estimated tax liability exceed or equal to 10,000 rupees, then your tax, this estimated tax liability, need to deposit on some specific date of previous year at some specific percentage. What are those specific dates and what are those specific percentage? That we are going to discuss later when we will discuss the provisions of advance tax. Now, how TCS works? Tax collection at source. And as I have explained to you, that is on some transaction base. So if there is a transaction on which TCS provisions are applicable, then on those transactions, extra tax need to be paid by the buyer. Now, how it works? Suppose there is a payer and there is a pay. Suppose there is a buyer who is going to buy a car from a car dealer. So car dealer would be a pay, that means a seller, and the buyer would be the payer. Now the car value is suppose 20 lakh rupees and the TCS is 1%. Then the buyer needs to pay 20 lakh rupees and 1% TCS extra to the seller. 1% of TCS, like 20,000 rupees. So buyer will pay now to the seller 20 lakh and 20,000 rupees. Out of this 20 lakh 20,000, seller will keep 20 lakh with himself, and this 20,000 rupees need to be deposited by a seller as TCS of buyer. As the same case, TDS deposit by payer, TCS needs to be deposited by pay. 20,000 needs to be deposited on behalf of buyer to the income tax department. So when the buyer is going to file his return of income, in the same way, the TDS benefit he can claim, the TCS advantage also he can claim. The difference between TDS, TDS is on some specific income base, TCS is on some transaction base. TDS has been deducted from the income. If the payment is 100 rupees, you are going to get 90 rupees after deducting 10 rupees of TDS. If there is TCS, then the payer needs to pay extra amount. If the 10% is TCS, you have to pay 10% extra. You cannot deduct it. Okay, so we are going to discuss all these provisions in detail one by one. So I just explained you the overview of these three things. Now we are moving on with the provision one by one. So deduction of tax at source and advance payment. So this TDS, advance tax and TCS, all these three things are like collection of tax in the previous year. The total income of assessee for the previous year is taxable in the next year, that is assessment year. So final taxability would be decided in assessment year. But we are going to collect some tax in the previous year before finalizing the tax liability. And if there is any short payment, that would be payable. And if excess we paid, we are going to get the refund also. For example, the total income of previous year 24-25 is taxable in assessment year 25-26. However, income tax is recovered from the assessee in the previous year itself through TDS, TCS, payment of advance tax. So these are kind of tax collection method. And you can see said self-assessment tax is not here because that is the amount of tax we need to pay in the assessment year. So we are discussing the tax collection method of previous year. These are TDS, TCS in payment of tax. Another mode of recovery of tax is from the employer through tax paid by him under section 192(1)(a). That is tax liability on non-monetary perquisite of employee. If employer wants to discharge the taxability, then he needs to pay the tax under section 192(1)(a) on the non-monetary perquisite. So that's an exceptional case. What are this non-monetary payment of tax? We have an example also. We will discuss this case later. These taxes are deductible from the total tax due from the assessee. Whatever tax you will pay, you can take the benefit at the time of filing of your return, whether it's TDS, TCS, or advance tax. The assessee, while filing his return of income, has to pay self-assessment tax under section 148. When you need to pay self-assessment tax, students, we have discussed it. So when we need to pay self-assessment tax, if our tax liability is higher than the collection of tax via TDS, TCS, or advance tax. Okay. If the tax due on the total income as per his return of income after adjusting TDS, TCS, relief under section 89, AMT provision, etc. After reducing all kind of tax, if your total tax liability is higher, then you have to pay tax as self-assessment tax. Now there is direct payment under section 191. Section 191 provides that in the following cases, tax payable by assessee directly. When, suppose there is some income on which no TDS is applicable. Suppose there is Mr. A. Let me tell you with the help of a simple example. What section 191 wants to explain you. It says direct payment. So it says, suppose there is Mr. A and Mr. A having two kinds of income. Incomes on which no TDS applicable. Suppose there is income of 1 lakh rupees on which there is no TDS concept, no advance tax concept, no TCS concept. So on this income, tax need to be paid directly as self-assessment tax. And suppose there are income on which TDS was applicable. So the tax need to be paid by the payer. But suppose TDS was applicable, but no TDS. deposited. Suppose 3 lakh rupees are income on which TDS provisions are applicable, but the payer did not deduct the TDS and did not deposit the tax on this income. Then in this case also, the tax need to be paid by assessee directly to the government. The simple way, if there is no TDS applicable on any income, then tax need to be deposited by the assessee at the time of filing of return. And if there is TDS applicability, but TDS has not been deposited by the payer by default or by any reason, then tax need to be deferred by the assessee himself. The payer who did not deposit the TDS, etc., will definitely going to suffer liability of penalty, etc. But it does not mean that if there is TDS liability and your payer did not deduct the TDS, then you do not need to pay tax on it. No, you have to pay tax on it. If TDS deducted, then of course TDS would be deposited automatically. But if payer was in default for depositing TDS, then assessee needs to pay the tax by himself. Okay. कौन पूछ रहा है question? Jainder is asking for income including loss only section 64 written in section 61. If there is loss, I have explained it in the provisions of set off and losses that if there is a loss, the treatment would be same as in case of income. In case of clubbing provision, we already discussed this, that as the income has been clubbed, if there is any loss, then the treatment would be same as in case of income. The loss would be treated as your loss and you can set it off, etc., as per the set off provision. Divya is asking, can we pay an approximate or random amount as advance tax? No, Divya. We have a specific percentage, a specific date. The percentage is like 15% of tax we have to deposit as first installment. Then we have 45% and 75%. We will discuss those provision in detail when we will go through with advanced tax concept. Just stay with me. What I am actually explaining right now. Just focus on that thing. We are going to discuss each and every point when the time will come. Tanu is saying, sir, in this chapter, we need to remember section also. If you can, then that is very good. Try to remember because these sections are based on, these provisions are based on section. So if you are able to remember those sections, it's very good. Not in this chapter, in every chapter it is good. पवन इज सेइंग थोड़ा बहुत हिंदी में भी बोलिए ना सर. बेटा मैं बिल्कुल पूरे हिंदी में बोल देता, बट दैट इज नॉट परमिटेड. वी हैव टू बी इन द इंग्लिश ओनली. बट आपकी कोई प्रॉब्लम हो, अगर कोई क्वेश्चन हो, तो आप हिंदी में पूछ सकते हैं. मैं उसका आंसर आपको हिंदी में दे दूंगा. Shagupta Parveen is saying that means advanced TDS, TCS collection in the previous year, not assessment year. Yes, exactly, Shagupta. TDS, TCS, advanced tax. What exactly it is? Like if I am earning some income and government thinks why we should wait for collection of tax of that person income till the next year filing of return date. We should collect some amount from that person income, so that would be reduce the full liability of tax on that person also. He needs to pay tax in installment. So that would not be a huge amount of tax at the time of filing of return, and that would be for the benefit of government also. Government will collect that amount in early stages. So that can be utilized by the government also for the welfare of country. Yash saying, sir, if pay deduct but does not pays, yes, the TDS is going to be deducted by the payer, not pay. Okay, so if payer deduct but does not deposit, then it would be the default of payer. Government will charge huge penalty upon the payer, and pay does not need to pay that tax. Tanu is asking what is SAT. We have discussed SAT was self-assessment tax under section 148. So even after paying TDS, advance tax and TCS, some amount is left at the time of filing of return. Suppose there is some tax liability. then that tax liability need to be paid via SAT, self-assessment tax. That is going to be discussed in next chapter, filing of return of income. Okay. So moving ahead. That was direct payment of tax. So you can see it says that in the following cases, tax payable by the assessee directly in the case of in respect of income on which no TDS required to be deducted. So if that kind of income on which TDS provisions not applicable, then you need to pay the tax directly. And if there are some cases on which TDS liable to deducted, but is not actually deducted, payer forgot, then assessee needs to pay that tax directly to the government and payer would be treated as assessee in default and he needs to pay penalty, etc. Clear? Now, one by one, we are discussing those source of income on which TDS provisions are applicable. The first one is salary under section 192. So how we will get salary? Salary we generally pay or receive monthly. So the TDS liability on salary also, it is a monthly liability of TDS. And to calculate this liability, this is very, very simple. That how to calculate TDS in case of salary. And if your parents are working somewhere on which TDS has been deducted on their salary. So this is the process how actually salary TDS needs to be calculated. Suppose there is Mr. A who is an employer and there is Mr. B who is an employee. Mr. A decided to pay Mr. B 1 lakh rupees per month as salary. Now from April onward, he is going to pay 1 lakh rupees per month as salary to Mr. B. So now how to calculate the TDS of this salary income? In the April only, the employer needs to calculate the annual salary of Mr. B on the basis of April month information. So the approximate salary would be 12 lakh rupees. And Mr. A will ask from Mr. B, either you are going to paying some kind of insurance premium, some medical insurance premium. Do you have any kind of deduction under section 80C or 80U? And suppose if Mr. B is having some proof, premium policy, etc., if he has done in April only, and he say yes, that would be approximate 1 lakh rupees. So the total income, that is also an estimated total income, would be 11 lakh rupees. And what will happen upon this 11 lakh rupees? We will calculate approximate tax as per the slab rate. We know the slab rate according to whether it's default tax regime or that is a optional tax regime as per opt by the employee. Whether it's default tax regime or optional tax regime. Whatever would be the tax amount need to be divided by 12. So that would be his TDS per month. And this TDS, this 1 lakh rupees salary, this TDS per month needs to be deducted from this salary. So this is the amount which is going to be received by Mr. B. That would be salary in end. There could be other income also. Suppose the April income is 1 lakh rupees, then Mr. B says that I am going to earn 50,000 per month from rental income also. So that 50,000 per month as a house property income, again we need to calculate, we need to add back in this income. And his tax liability would be higher. If there is any commission income or any other income, then we need to calculate the TDS accordingly. So technically you can say, this is the kind of calculation as the calculation of total income and tax. First, the difference is this, we have to do this calculation in the April month on estimated basis that for the year, the tax liability would be this much, including salary income, including your other sources income. We did not deducted the standard deduction from this. It would be either 50,000 or 75,000 depending upon the regime he opted. So after normal calculation of total income and the tax, whatever would be your tax, that would be your TDS amount if we need to pay it monthly. If somebody asks, what is the average rate of tax? So average rate of tax in this case would be tax amount upon total income into 100. So whatever will your tax, that would be your tax, and divide by total income. This is your total income. What is the requirement of calculating average rate of tax, that you will able to understand when we will go further. So on the salary income, this is the way how we need to calculate the TDS. Need to calculate your total income of the year on the basis of estimated information. There is a possibility also that salary could be increased or decreased during the year. Then in that month in which we will be able to find out the increment, suppose in July month, salary has been increased from 1 lakh to 1,20,000. Then we have to do this revised calculation again, and TDS liability would be increased. So this section casts an obligation on every person responsible for paying any income chargeable to tax under the head salary to deduct income tax at the time of payment. So we are talking about the employer. Employer is liable to pay TDS. How we need to calculate the tax? Such income tax has to be calculated. Average rate of income tax computed on the basis of the rate in force. Okay. How we need to calculate the average rate? The formula we have just discussed. Average rate of income tax means the rate arrived at by dividing the amount of tax by total income. So income tax, what is the use of it? That you will going to understand. Upon total income into 100. Your employer will ask you about the information of your other income, your deduction, which option you want to opt, etc. And whatever information you will submit, on the basis of that, he will calculate your tax liability estimated basis for the year. And whatever would be your tax liability, that needs to be divided by 12. So that would be your monthly TDS liability. It would be reduced from your salary amount. And that is going to be deposited to the income tax department. If you do not intimate to the employer that whether you are going to under default tax regime or under optional tax regime, so what would be the normal case of calculation? Of course, if you will not inform the employer, then automatically default tax regime calculation would be applicable. The concept of payment of tax on non-monetary perquisite has been provided, that we were discussing in the starting of this topic, that if there is any non-monetary perquisite on which tax liability has been paid by employer, so that kind of perquisite is not, the amount of tax paid by the employer is not going to be included in the hands of employee as a perquisite, and that amount cannot be claimed by employer also as a business expenditure. Such tax have to worked out at the average rate applicable to aggregate salary income of the employee. So how it will work, now you will understand with the help of this example. Now this is very important. As I always say, that if there is a numerical topic and if you read out the provision, if you learn those provision, you won't be able to understand until you are going to solve a question of that. So we have gone through with the TDS concept of salary, but when you will solve this illustration number 1, you will find it out, okay, that is how we need to calculate the TDS, average rate of tax, etc. Okay. Priya Mishra is asking, this TDS deducted will be deducted from the tax liability of Mr. B. Yes, Priya, exactly. Whatever TDS will be deducted from the salary of Mr. B, that is going to be the tax liability, whatever will be the tax liability of Mr. B in the assessment year, he can reduce this TDS payment. TDS payment means a tax payment in advance. So suppose Mr. B liability at the time of filing of return is suppose 5 lakh rupees. Then whatever amount as TDS has been deducted from his salary, etc., is going to reduce from that 5 lakh rupees tax liability. What if TDS is calculated as per default tax regime, then employee excise normal regime? Not an issue. Whatever regime employee will excise at the time of filing of ITR, whatever would be the tax liability, the TDS which has been deposited by the employer is going to be reduced from it. So whether TDS has been deposited under default tax regime or as optional tax regime, you are going to get the benefit at the time of filing of ITR. Okay. So even pension income TDS will be calculated in this format. Yes, every kind of income which is connected with salary head of income. Priya Mishra is saying, but earlier you said it will be deducted from the no. From the payer liability, it cannot be deducted ever. This is the tax of payee. This is employer. The payer I say about the TCS, not regarding TDS. In case of TCS, the payer needs to pay extra tax. In case of TCS, okay, Priya? In case of TCS, the payer is the person who is going to pay the extra tax. So whatever extra TCS is paid by the payer, that is going to be deducted from the payer tax liability. In case of TDS, the pay tax liability would be there. From that, TDS need to be deducted. So that might be a confusion for you. Payer TDS liability deduction would be in case of TCS payment, not in case of TDS. सौम्य is asking, sir, tax liability में से TDS automatic less होगा या हमें बताना होगा? देखिए, जो भी TDS डिपॉजिट होगा या TCS डिपॉजिट होगा, एम्प्लॉयर करेगा या एडवांस टैक्स पेड होता है, वो ऑटोमेटिक इनकम टैक्स की साइट पे अपडेट हो जाता है. जब आप रिटर्न फाइल करते हैं अपना सॉफ्टवेयर से, तो वहां पर आएगा इंपोर्ट योर TDS TCS. जैसे ही आप उसको क्लिक करेंगे तो वो ऑटोमेटिकली आपके पैन नंबर पर जो भी TDS TCS पे हुआ है वो रिफ्लेक्ट करके ऑटोमेटिक माइनस होगा. लेकिन अगर आप उसे इंपोर्ट नहीं करेंगे तो वो ऑटोमेटिक नहीं. इसीलिए क्लाइंट सीए को ढूंढते हैं और क्लाइंट सीए से कराएंगे या किसी फाइनेंशियल कंसल्टेंट से, तो वो उसे ठीक से कर पाते हैं. Priya Mishra saying okay, deposit liability was yes, okay, clear. So now we will solve this question so you would understand what exactly we were discussing. And it's very simple logically, no calculation, no different calculation for TDS. We are just calculating normal tax on the basis of estimated income. And whatever will be the tax, that would be my TDS liability. Okay. So Mr. A, the employer, pays gross salary. Let me change the color of this pen. This will take and okay. Gross salary including allowances and monetary payment is 7,00,000 to his general manager. Besides, the employer provides non-monetary perquisite to him, whose value is estimated at 1,20,000. The general manager is exercising the option to shift out of the default tax regime and pay tax under the optional tax regime. What is the tax implication in the hands of Mr. A? Employer and general manager, the employer. So we have to tell what are the implication in the hands of employer and employee. So gross salary is 7,30,000, clear? Non-monetary perquisite would also form part of his salary, 1,20,000. Now total is 8,50,000 because he is under optional tax regime. So standard deduction would be 50,000. So my net salary is 8 lakh. Clear? Any problem in this? Now you will feel the implication is simple. The problem is with the, until we will solve the question, we won't be able to understand the applicability clearly. Just a second. Okay. Now you can see tax liability on this income. Tax liability on this income, 8 lakh as per normal provision would be 75,400 rupees. Clear? Tax would be 72,500 and then cess would be 2,900. So when you need to calculate the tax liability, that would be a normal calculation of tax. All provision like rebate, surcharge, tax liability, cess, you have to calculate tax as assuming that we are going to calculate the normal tax. For the purpose of TDS, there is no special kind of calculation. Exactly the normal kind of tax we have to calculate. Okay, 4% cess. So this is my tax and 8 lakh was my income. So if the question asks you to calculate the average rate of tax, that would be 9.425%. Why do we need this 9.425% to calculate the tax on non-monetary perquisite? So now the tax liability is 75,400. So if that is monthly, we needs to know that needs to be divided by 12. That would be the monthly TDS liability. Alternatively, Mr. A, that means employer, can opt to pay tax on non-monetary perquisite. So if in this question employer says that I am going to pay tax on non-monetary perquisite, what I am going to give to my employee. So how we calculate the tax on non-monetary perquisite? So for that purpose, my rate would come into the action. Liability was 120, the rate is this, so 11,310 needs to be paid by the employer. And now employee TDS or tax liability would be only 64090 divided by 12. That would be per month TDS deduction from the salary of employee. Understood? If Mr. A pays tax of 11,310 on non-monetary perquisite, then this 11,310 rupees expenses of tax which is made by employer, he cannot claim the deduction of this 11,310 rupees in his P&L account. This is disallowed expenditure. Remember, and I believe you must have gone through with this concept also in PGBP head. Again, the amount of tax paid towards non-monetary perquisite, whatever amount of 11,310 is not going to be considered as perquisite in the hands of the employee. So this 11,310 cannot be treated as expenses in the hands of employer and cannot be treated the income in the hands of employee. If there are more than one employer, then again, you have to calculate the total salary from all of the employer and accordingly, you have to calculate the tax. There is no difference calculation, same calculation we have to do. There is no difference calculation. Okay. You can read this provision. This is also for your homework. Point number 7 says, suppose your salary income is 10 lakh, on which your tax liability is, there's some other income also. Suppose 2 lakh rupees. On this 2 lakh rupees, 20,000 TDS has been deducted. There is some other income like commission, etc. So now for the purpose of your salary income, we will consider the other income also. This total income is 12 lakh. And now we calculate the tax on this total income of 12 lakh rupees. Suppose, assume the tax liability including surcharge, cess, etc. is suppose 1,25,000. Now in this 1,25,000 rupees, TDS of 20,000, which belongs to some other income, has been included. This income also included. So the tax liability is including the income of 2 lakh rupees. So the tax is including the tax of this income also. So this cannot be your salary TDS. If any other TDS has been deducted, you have to reduce it first. And this would be treated as your TDS for the purpose of salary. So point number 7 is going to explain that if there is any other additional income which has been reported with salary income, then in calculation of TDS, whatever would be the tax liability or TDS liability of salary, the TDS which has been paid for other income is also going to reduce from it. A taxpayer receiving salary has in addition other income chargeable to tax for the financial year may send the employer the following particulars of any other income and any TDS on that other income if has been paid. If there is any loss, only the loss of income from house property need to be considered for the purpose of calculation of TDS. And that is also only if you go for optional tax regime. Because in the default tax regime, the house property loss cannot be set off from any other income. So house property loss can be only claimed if you are shifting opt out of the default tax regime provision. The employer shall take the above particulars into account while calculating the tax deductible at source. To avoid the cash flow issue for employee, the scope of section 192(1)B has been extended to include any tax deducted or tax collected at source, whether you have paid TDS or you have paid TCS on any other income. So whatever would be your tax liability, like we have discussed in the last example, suppose your tax is 125, TDS on other income was 20,000, need to be reduced. Even if there is any TCS paid by you, suppose 30,000 TCS also paid by you, then this would be your TDS on salary. So you can calculate on monthly basis. So earlier only TDS on other income was allowed, but from 1st October 24, TCS also need to be reduced for calculation of TDS on salary. This is for reading purpose. Again, the same provisions are there that only house property loss would be there, etc. Furnishing of a statement, that's for your reading purpose. It's a procedural part because it's a huge chapter. We have to complete this chapter in only 3 sessions. So it will take a lot of time to discuss the technical provision. So the procedural aspect, I'm just asking you to read, go through with it. If there is any problem, you can ask me. The all technical points, the special provision that we are going to discuss. Okay. Circular by CVDT, also for reading purpose, you can skip also. What are the proof, evidence, if you are claiming any deduction, etc., like life insurance premium or any kind of income you want to report. So the evidence or proof would be there. What kind of proof be required? This is the list of it. That was section 192, that is salary on TDS. Now interest on securities. So if you are earning any interest on securities, we are not talking about the interest on loan, etc. We are discussing the interest on security, like interest on debenture, bonds, etc. On these kind of interest also, TDS concept is applicable. So there would be a payer and there would be a pay. Payer would be that company whose debenture bonds are purchased by us. So that company or government, etc., going to pay interest on debenture, bonds, etc. We are not talking about dividend because dividend is on shares. It's not interest. So securities dividend provision is under different section. These are interest on security concept. So that's why dividend concept is not going to be discussed. That is also an income on security, but that is not in the nature of interest. So if the payer pay interest on debenture, bonds or any security to a payee, then section 193 apply. So when TDS need to be deposited, etc., we are going to discuss those provision in this section. Person responsible for deduction of tax. Who would be responsible? There is a universal provision. Always payer are responsible for deduction of TDS. Okay. This section cast responsibility on every person responsible for paying to a resident any income by way of interest on securities. Clear? General, there are some common lines you would be able to read in all section of TDS, like this one, the other one. What is the meaning of interest on security? So the provision says interest on any security of the central government or state government, of course, interest on debenture or other security for money issued by or on behalf of a local authority, company, or a corporation established by a central, state, or provincial act. So these are we are talking about the payers. So interest on security means security issued by these category of person on which interest is paid, then TDS provision would be there. Such person means the payer with the responsibility to deduct the income tax at the rate in force. The rate has been decided 10%. So whatever interest you are paying to the pay, 10% TDS need to be deducted. So if 1 lakh rupees interest is going to pay, then technically 90,000 is going to be received by the payee and 10,000 is going to be deposited as TDS. The benefit of this TDS is going to be claimed by payee at the time of filing of return. Time of deduction at source. Now this point is going to be repeated again and again in every section. So I am reading it for you once, and in all other section, the same point is going to be repeated again and again. And it says the TDS need to be deducted at the time of accrual or payment, whichever is earlier. So in obviously, first of all, the interest would be accrued or credit in the account of pay, and the payment would be thereafter. But the income tax has been made the provision, even accrual of interest or payment of interest, whichever is earlier, TDS need to be deposited. And this point is almost applicable in every TDS provision. Tax should be deducted at the time of credit. Credit means accrual of such income into the account of the pay, or at the time of payment thereof in cash or by issue of a check or draft or any other mode, whichever is earlier. So this is the common point for almost all sections. Where any income by way of interest on security is credited to any account in the books of account of the person liable to pay such income, whether you pass any kind of entry by whatever name called, but if the interest has been accrued for the payment, we will consider it for the purpose of TDS deduction. Such crediting is deemed to be the credit of such income to the account of the pay, and tax has to be deducted at source. The account to which interest is credited, so whether you credit with the name of interest payable account or suspense account, by whatever name called, we will assume it as that is the time of accruality, and the TDS need to be deposited accordingly. Non-applicability is more important. There are certain cases on which interest TDS not required to be deducted. So we can say these are kind of exemptions. In these kinds of interest, in these types of interest, there is no requirement of TDS deduction. No tax deduction is to be made from any interest payable. These are specific bonds on national development bonds, 7-year national savings certificates, on debentures issued by any institution, authority, or any public sector company or any cooperative society as notified by the central government. So if that is a national development bonds, no need of TDS, 7-year national savings certificate, no TDS on interest, notified by government bonds, no TDS requirement. On any security of central government or state government. So if any security has been issued by the central government or state government, TDS not required to be deducted except these. TDS on this security and TDS on these government security. So these are security liable for TDS. Any other securities are not liable for TDS. These securities are, it may be noted that tax has to be deducted. So we can say this is the exception of exemption. Point number 4 says No TDS on any security of the central government or state government. But the note is going to explain the exception. These are government security, but on this government security, TDS required to be deducted. The first one is 8% saving bonds. The first one. Or 7.75% saving bonds. If the interest exceed 10,000 rupees during the financial year. So if on these two bonds, interest is 8,000 rupees, there is no TDS requirement. Interest is 10,000 rupees, no TDS. For example, interest is 8,000, no TDS. Interest is 10,000, no TDS. C case, interest is 11,000. Yes, TDS. Now, can you tell me if the rate is 10% of this TDS, the TDS need to be deducted on 11,000 on full value or only 1,000, the excess of 10,000? What would be the correct answer? TDS need to be applicable on 11,000 or only on 1,000? 11,000, Ishan is saying full value. Pawan is saying 50,000 नहीं समझा सर और 72,500 नहीं समझा सर. 72,500 नहीं 70. There are standard deduction, Pawan. If you opt for optional tax regime, it is 50,000. If you go for default tax regime, it's 75,000. Okay. Full value 11,000, 11,000, 11,000. All answers are absolutely correct. Well done, students. Yes, exactly. In all TDS provision, there is a universal rule. If the limit exceed, then it is always going to be applicable on the full value. Even if it is 11,000, even if 10,100 rupees, then the TDS needs to be applicable on full value 10,100 rupees. Well done. So these were two bonds. We have two more bonds. With effect from 1st October 24, two more bonds has been included. Floating rate saving bonds 2020. These are included from 1st October 24. Or any other notified security of the central government or state government if such interest payable exceed 10,000 during the financial year. So what you can do, you can make a short note of section 193. What you will write in this short note? This is interest on securities. Rate is 10%. Clear? If exceeding 10,000 for these four securities, you can mention. These four securities are liable for TDS provision if the amount exceeding 10,000. These four are this 8%, 7.75% from 1st October. The third one included, that is floating rate and other notified. So this short note will make you understand that what kind of interest is liable for TDS concept. Clear? Next is, we are reading exception. On any debenture, whether listed or not listed on a recognized stock exchange, issued by the company. So if the debenture has been issued by the company on which you are receiving interest, in which the public are substantially interested, that means a public company. And if the interest is going to be paid to a resident, individual or HUF, then TDS need to be deducted when it is exceeding 5,000. The interest should be paid by the company by an account pay check. The amount of such interest or aggregate paid during the financial year should not exceed 5,000. So up to 5,000, no TDS. If exceeding 5,000, that would be liability of TDS. So you can remember like this also. More than 10,000 limit is for government securities. We are notified 1, 2, 3, and 4. More than 5,000 limit for company debentures. Clear? And the rate is 10%. Again, on security of LIC, GIC, subsidiaries of GIC, etc., these are also out of the TDS purview. So let me tell you again, We were discussing the exception. We were discussing the exemption, that interest on debenture not liable to TDS if point number 5 case fall on national development bond, 7-year national scheme, notified government security. Under government security, there are 4 exceptions: 7.75%, 8%, and floating rate notes. TDS would be there if interest exceeding 10,000. Other than these, if a company debenture interest, TDS would be there if an interest exceeding 5,000 rupees. This is the main summary of section 193. Let me again tell you, please make short notes of TDS concept and deductions also. Under section 80C and 80U, you must have gone through with the deduction topic and you must have noticed it's a huge topic, multiple deduction. So that is really difficult to remember all deductions like that. In the same way, this is very difficult to remember all TDS provisions, so only short notes will help you. In that short notes, in case of TDS, you have to remember the basic things. What is the income, amount limit, rate, percentage, or any other specific special notification or exception. If you're able to write it down, you will be able to learn them very easily. Okay? Because you can see no specific section of TDS is difficult. Salary section 192 was very easy. You do not need to do anything. You just need to know how to calculate the tax on income. If you are able to calculate the tax on income, you would be able to calculate the TDS on salary income. Section 193 is very simple. Now section 194A. Interest other than interest on security. Because for interest on security, there is section 193. Now we are discussing interest other than interest on security. So we are discussing here the interest on loan, etc. Because interest on security provision, section 193 there. Other than interest on security, any other kind of interest is going to be liable under section 194A. Okay. Let me see if there's any query. Priya Mishra is saying, sir, if I have one 8% bond and another 7.75% bond and aggregate interest exceed 10,000, yes, in that case, TDS need to be deposited. 8%, 7.75% and floating. If the aggregate of interest of these 3 bonds exceeding 10,000, you have to charge the TDS on that. Theory question, of course, could be there. They can ask you explain the provisions of TDS on interest on securities under section 193. And then you need to explain in short the provision of section 193 depending upon the marks weightage of that theoretical question. This section deals with the scheme of deduction of tax at source from interest other than interest on security. The provisions are applicability of TDS. Now it's very interesting. Who can deduct TDS under section 194A? So it says all person except, you need to understand it very carefully, except individual and HUL. So suppose Mr. A, let me ask you this question on a separate sheet, okay? Okay, Mr. A gives a loan to Mr. B for rupees 50 lakh at the rate of 10% per annum. Clear? And now interest on this loan is 5 lakh rupees. So who is going to deduct the TDS in this case? Who is the payer? Give me your answer, A or B. Who is going to deduct the TDS? So TD payer from the point of view of TDS I am asking, okay? From the point of view of TDS, who is the payer? Nidhi is saying B, Harsh is saying B, very good. Rajveer is saying B. Christian is saying A, Sahil is saying B, Soumya is saying B, Yash is saying B. Absolutely correct. Because the interest is going, V Bala Subramaniam is saying A. Why? The payer is person who is going to pay the interest. So B is going to pay the interest now because he is the borrower. So B is going to pay the interest to Mr. A. So he is the payer in this case. And Mr. B would be the payee of this interest. Clear, Mr. Balasubramaniam? Okay. So Mr. B point of view we are discussing. Now the provision says if there is an interest other than interest on security and TDS needs to be charged on every kind of payer has been included. All person has been included. Person means section 231 definition, individual, HUF, etc. But except individual and HUF. So if the payer is individual HUF, then TDS need not to be deducted by that payer under section 194A. So in our example, Mr. B is the individual. So technically in this case now, section 194A provision would not be applicable, but there is a twist. The provision says except individual HUF, but if that individual HUF having turnover, if he is carrying a business and his turnover is exceeding 1 crore rupees, his sale is exceeding 1 crore rupees, and if he is carrying a profession and his receipt exceeding 50 lakh rupees, in preceding previous year, this is very interesting, in preceding previous year. So this transaction belongs to previous year 24-25. The interest has been paid in previous year 24-25. So for the purpose of the payer condition, we have to see that the turnover of this individual HUF, if exceeding 1 crore, or if that's a professional, it's exceeding 50 lakh in preceding previous year. That means we have to check this turnover in previous year 23-24. So if the business turnover exceeding 1 crore, or if that is a professional person and exceeding the receipt more than 50 lakh in previous year 23-24, then TDS applicable. Then this individual or HUF need to deduct the TDS. But if business turnover is less than or equal to 1 crore, or professional receipt less than equal to 50 lakh in preceding previous year, that means 23-24, then TDS provision not applicable. So all person includes, but individual HUF only this category include. Those individual HUF having turnover of more than 1 crore or receipt more than 50 lakh in preceding year 23-24. Now there's a very interesting thing. You may be going to ask me. Suppose the turnover of Mr. B, suppose in this example, if I'll say that Mr. B turnover exceeding 1 crore in previous year 23-24, then TDS provision would be applicable and Mr. B needs to deduct the TDS. And if the turnover does not exceed 1 crore, then no TDS applicable. You have to check it like this in the preceding year. Even if in the current previous year, suppose Mr. B turnover in previous year 24-25 is 5 crore. In previous year is 24-25 is 5 crore. But in the preceding year 23-24, it was 80 lakh only. Then TDS provision would not be applicable, because for the purpose of TDS applicability, I have to check the preceding year turnover. Whether in current year his turnover is 50 crore, even in that case, section 194 is not applicable. Even turnover in current year is 5 lakh, but the turnover in preceding year 23-24 is more than 1 crore, then TDS need to be applicable. Understand? So, I guess, Manish, can we take a short break now? Okay. Welcome back, everyone. We were discussing the provision of TDS, and in which we were discussing the section 194A, which is for interest other than interest on security. So in that, we are considering the interest of saving bank interest, FDR interest, and any interest on loan, etc. So the pair we have discussed, applicability of TDS under section 194A, and it says the section applied to interest other than interest on security. An applicable pair are all other than individual or HUF. But those individual HUF are covered, those gross asset or turnover is exceeding 1 crore or 50 lakh in the immediately preceding the financial year. So for the purpose of previous year 24-25, we have to check the turnover of previous year 23-24. Clear? Time of deduction, I have asked you in the last section also that this is same for almost all the section, credited or payment, whichever is earlier. Now you can skip this. You just need to read from this point. In such cases, this is regarding CBS system. In bank, the interest is generally accrued day-wise, but you are not able to deduct the TDS as day-wise or weekly. So the bank is generally deposit the TDS in the account, maybe on quarterly basis or half-yearly basis or at the end of the financial year. So when the interest would be created in your account, at that time, the TDS provision would arise. So you can read this part only. The above part is non-relevant. Okay. The rate of TDS is again 10% in this case also. Non-applicability, or we can say the exemption, or we can say the exceptions, etc. There are certain cases in which this interest provisions are not required to deduct the TDS. No deduction of tax shall be made in the following cases. If the aggregate amount of interest paid or credited during the financial year does not exceed 5,000. So if the interest amount is up to 5,000, there is no requirement of TDS deduction. And this limit of 5,000 would be 40,000 if the payer is banking company. So if bank is paying interest, etc., then TDS would be deducted only if it exceeds 40,000 in a financial year, whether the payer is bank, cooperative society, or post office. And if the person is senior citizen, if the payee is senior citizen, this limit would extend to 50,000 rupees. You can see in respect of senior citizen, this limit would be 50,000. So we can say like this: if interest payer is bank, cooperative society, or post office, the limit of interest would be 40,000. Or if it is a senior citizen, it would be 50,000. Above this amount, TDS will be deducted if the amount is exceeding 40,000. If it is 41,000, the TDS is going to be deducted on full value. Other than these pair, this limit is only 5,000. Exceeding 5,000, TDS provision would be applicable. As simple as that. Okay. The limit to be calculated with respect to income credited or paid by a branch of a banking company or cooperative society, whether it's a FDR, of time with cooperative bank or housing finance company, etc. This is going to be on the basis of aggregate amount. You can skip this. In case of CBS system, the bank follows CBS system, core banking solution system. Suppose Mr. A is having account in Bank of Baroda. One branch, area 1 of Bank of Baroda. He has also an account of Bank of Baroda, area 2. And suppose the third account in area 3. The interest is 20,000 from this, 20,000 from this branch, and 20,000 from this branch of Bank of Baroda. The bank is same. The branches are in different area. So the CBS system does aggregate the whole amount of interest for the particular customer whether he is having account in different branches. So the interest would be considered 60,000, and because it is exceeding 40,000, so TDS would be applicable. If these are separate banks, not Bank of Baroda, suppose this is Bank of Baroda, this is State Bank of India, this is HDFC Bank, then there would not be any TDS liability. Okay. There are some exceptions as we are discussing the exceptions. Interest paid by the partnership firm to the partners, not liable to TDS. Interest paid credited in respect of deposited under any scheme framed by the central government. There is no requirement of TDS. Interest income credited or paid in respect of deposit with a bank to which the Banking Regulation Act 1949 applies. There is no requirement of TDS. Now point number E and F, you need to skip because these point has been included from this point. So you can skip this whole paragraph and you can read from only this. This is for cooperative society. However, a cooperative society referred to in point number E or F is liable to deduct tax. Generally, a cooperative society, if pay interest to its member, there was no applicability of TDS. As in case of partnership firm, if partnership firm pay interest to partner, no TDS. In the same way, if a cooperative society is paying interest to the members, there was no TDS liability. But now as per the amendment provision, the concept has been changed. Now the provision has been explained over here. If the total sale, gross receipt or turnover of the cooperative society exceed 50 crore during the financial year immediately preceding the financial year. So we are talking about financial year 23-24. So if that cooperative society turnover is exceeding 50 crore rupees and the amount of interest created during the financial year is more than 50,000, if the member is senior citizen, and 40,000 in case of other, then TDS required to be deducted. So if the turnover does not exceed 50 crore, then no TDS on interest. But if the turnover exceeding 50 crore, then if the interest exceed 40,000 or 50,000, then TDS liability would be there. If you want to discuss or read point number E and F, you can go through it. But again, that is not useful because the new provision, including point number E and F above, from over here. So you can read from this point. So that would be clear in your mind when TDS required to be deducted. So thus such cooperative society is required to deduct TDS under section 194A on interest credited or paid by it, whether to its member in respect of deposit with a primary agricultural credit society or in respect of deposit with a cooperative bank other than a cooperative society or bank engaged in carrying on business of banking. So now these three cases are liable for TDS provided that cooperative society turnover exceeding 50 crore in previous year 23-24 and interest payment is exceeding 40,000 and 50,000 as the case. This interest also outside the purview of TDS, you can read these points, interest paid or credited to the following entities. Now this is interesting. If these are paid, point number H says, if these are pays, banks are pay, not payer, then no need to deduct the TDS. Why it is? Suppose State Bank of India give loan to Mr. A and Mr. A pay interest of 1 lakh rupees on this loan. Then if this exception or exemption is not there, now you are, if these kind of entities are pay, so now the SBI is pay in this case. So there is no TDS requirement upon Mr. A. So he can pay this full amount of interest to SBI. TDS need not to be deducted. If SBI payment to Mr. A, then the concept of 40,000, 50,000 is there. But if these banking companies, financial institution, life insurance company, post office, etc., if they are paying, then nobody can deduct the TDS on the payment of interest, if any, going to pay to these entities. Okay. So this is very interesting. Point number H. If these are in the category of pay, TDS provision not applicable. Please read these points also. So these are the cases in which section 194A provision not applicable. Illustration 2. Mr. Shani sir, 50,000 is applicable if pay is senior or payer. It is always on the basis of pay. If the pay is senior citizen, then 50,000. If pay is not a senior citizen, then 40,000. Okay. Sir, even if interest is received from different bank exceed 40,000, then also it will be liable for TDS, right? As aggregate has exceeded limit of 40,000. No, because they do not have CBS system. Different banks do not have CBS system. So how they will be able to know that your interest is exceeding 40,000? Suppose I am having account in 3 separate banks. They are paying 20,000 each. How bank A will be able to calculate my interest exceeding 40,000? It's not possible. If the bank is same and I am going to open an account of different branches, then it is possible. But if I'm going to open account in different banks, then if each bank interest is exceeding 40,000 or 50,000, only in that case, TDS would be applicable. Shagupta is saying, sir, ये सारा limit कैसे याद होगा? पढ़कर याद होगा, revise कर. That's what I was saying. Kindly make short note of TDS chapter and deduction chapter also, because there are various limits. And if you think you are able to remember all these limits by reading the provision, in my opinion, that would be difficult. So make a short note. Like we have discussed section 192, then we have discussed section 193. So if you write it down and make short notes, that would be really easy to remind all these provisions. And let me tell you, this is for every student who is doing CA, whether it's Shabgupta or Somesh or anyone. सबके लिए same provisions है. So that's why CA, it's CA, not BA. So it takes your efforts, your hard work. So if you focus, you will write it down, you will make short notes. Definitely you are able to remember each and everything. Okay. Somesh is saying, sir, in these point, pays bank. Yes, if the bank, LIC, etc. is paying, then we cannot deduct TDS on their income. If they are payer, they will deduct TDS. But if I am payer and banks are paying, I cannot deduct TDS on interest. Okay. Point H not understood. Who was saying that? Somesh was saying. Point H is explaining, Somesh, that if interest paid or credited to the following entities, that means if we are paying interest and the receiver is banking, financial corporation, life insurance, etc., then no requirement of deduction of TDS on the payer. That is technically for the benefit of payer. Suppose TDS is not that simple. Suppose this Mr. A is paying interest to SBI. So as per the provision, there is no need to deduction of TDS. Suppose there is TDS provision applicable, then what need to be done? Mr. A need to deduct 10%, that is 10,000. He needs to deposit this amount to the government. This is the headache. Then he needs to file TDS return also. There is a concept of TDS return we will going to discuss. So if you are a payer and TDS required to be deducted and deposited, that is a very, very difficult, we can say, procedure to be followed, because there is a lot of responsibility of deduction of TDS, then need to deposit it, then filing of TDS return, etc. So that is a very good news from the point of view of payer, that it has been outside the purview of TDS. If you are the payer and banks, etc., are the pay, no TDS concept is there, means a lot of relaxation to the payer. Okay. Riyanshi is asking, sir, as syllabus is now almost over, paper 3 seems so fearful. Either I will get distinction or I will face difficulty in this paper, including GST. So many provisions in total. It is not that difficult. If you are reading or studying regularly, if you have planned it nicely, that I have to complete this chapter within this time duration, I have to revise this paper. So it won't be that difficult in my opinion. The problem is you might have short time because examination in September and we are at the end of June. So only 2 months is there. But remember, if you plan it nicely, you would be able to complete this syllabus and also you would be able to revise these chapters. कुछ भी करो कैसे भी करो, my advice to all of you is the same. At least you have to revise every chapter, every subject twice before examination. For that, how much hour you need to study, that is upon yourself, but at least 2 time division is mandatory. That will definitely going to make probability of your paper or subject clearance or your group clearance more than 75%. Okay, all the best to all of you. And remember, all CA going through with this kind of problem. And you have to manage things, you have to work hard, you have to sacrifice, you have to increase your working hours, your study hours, anyhow. Okay. So now illustration number 2. So we have discussed the section 194A provision. Now there is an illustration. After discussing this illustration, you will feel that was not difficult. You can see, examine the TDS implication of section 194A in the case mentioned. On 1st October 2024, Mr. Harish made a 6-month fixed deposit of 10 lakh at 9% with ABC Cooperative Bank. The fixed deposit mature on 31st March 25. So we have to find it out how much interest he is going to earn. He deposited on 10th October for 6 months. So 10 lakh, 9% for 6 months. How much interest would be there? That would be how much? 45,000. And the question does not say that the payee is a senior citizen. So because it is exceeding 40,000, so TDS provision would be there. So this kind of question would be framed in the examination. You might take the tension assuming that I have to learn all the points. No, examiner also knows that it is impossible for anyone to learn each and every point. So the question would be based upon the limit, the rate of TDS, and the applicability only. So these 3 points are very important from every section. You have to focus on these 3 points. Now on 1/6/2024, Mr. Ganesh made 3 9 months fixed deposit of 3 lakh. 3 9 months fixed deposit of 3 lakh each, carrying interest 9% per annum with Dwarka branch, Janakpuri branch, and Rohini branch of XYZ Bank, a bank which has adopted CBA system. The fixed deposit mature on 28th February 2025. So we have to find out, because these are branches of the same bank, so we can aggregate the interest amount. 3 lakh at 9% for 9 months and from 3 branches. So this will be 20,250 from one branch. From 3 branches, it would be 60,750. It is exceeding 40,000, so TDS would be applicable. Suppose if I change that these are 3 separate banks, not the same bank, XYZ Bank, ABC Bank, and HDF Bank, then in this case the answer would be no, because each bank is having interest less than 40,000. Okay. Now question number 3 is for your homework. We will discuss this in the next session. This is very interesting question. And the solution is saying interest is 28,000. You have to calculate how this is 28,000. So you have to find it out how the interest calculation has been done. The next section is section 194BA, that is winning from online game. So you must have known about these online games, Zoopy, etc. So if you are having any kind of winning out of these online games, That is regarding as your income from other source, and that would be a part of your casual income. So the TDS provisions we are going to discuss regarding winning from online games. Any person responsible for paying to any person any income by way of winning from online games during the financial year is required to deduct tax at 30%. Now, very interesting thing, the TDS rate on casual income is 30%, and the tax rate also in case of casual income is 30%. So in case of casual income, you can see the TDS rate and the tax liability rate is exactly the same. On the net winning in a person user account as computed in prescribed manner. TDS liable to deduct on withdrawal during the financial year. In case there is withdrawal from user account during the financial year, tax would be deducted at the time of such withdrawal on net winning comprised in such withdrawal. In addition, tax would also be deducted on the remaining amount of net winning in the user account as computed in prescribed manner at the end of the financial year. So if the user did not withdraw the account, the amount remaining at the end of the financial year also required for deduction of TDS. What if net winning wholly in kind or partly in cash and partly in kind? Whether the net winning are wholly in kind or partly in cash and partly in kind, but the part in cash is not sufficient to meet the liability of the deduction of tax in respect of the whole of the net winning, then the payer liability is to recover the TDS from the person who is maintaining that account. So government say we need our tax. If the cash is not there and only kind is there, then payer liability to deposit the TDS on that amount of kind winning also. Meaning of certain item, you can go through it. Online gaming, user account. Power of CBDT, there were some difficulties, practical difficulties was there. For that purpose, some guidelines have been prepared. So this is also your homework. You have to go through with this question and answer. If there is any issue in any answer, we will discuss it in the next session. There are simple question and simple answer. Now, a very important section is section 194C, and that is payment to contractor and subcontractor. Let me tell you this section with the help of an example. So, in case of work contract, a contract for any work, under section 194C concept is applicable. Now, in case of a work contract, there is a payer and there is a pay, and there should be a work contract for any work. Work contract not for sale and purchase of material. If it is a purchase and sale of material, then that is not a work contract. No TDS under section 194C would be applicable. Not for sale and purchase of material. Okay. So in case of work contract, one would be a payer and one would be a pay. So who would be the contractor? Payer or pay? Who would be the contractor in this case? Okay, this is saying payer would be the contractor. Rajveer saying pay. Jayendra is saying payer. Nidhi is saying payer. I'm asking who would be considered as contractor? And the payer would be the person who is going to pay. And pay would be contractor. And this would be contractee. Don't try to rhyme payer contractor. No. In the case of contract work, payer would be contractee, the person is going to pay the amount, and the contractor is the receiving. The person is receiving the income, so he would be the payee. So contractor would be the payee, and contractee would be the payer. So if there is any work contract, TDS required to be deducted under section 194C. The TDS rate has been mentioned if this contractor is individual HUF. TDS rate is 1%. If that is other than individual HUF, TDS rate would be 2%. The payer would be again same, all person except individual HUF. But again, those individual HUF included, the same concept we have discussed, if their turnover exceeding 1 crore or exceeding 50 lakh in preceding previous year 23-20. Clear? Now this was work contract, and this work contract can be subcontract also. So if this contractor subcontract this agreement, this work to someone else, so that person would be called now subcontractor. And now he will become, this contractor would become, for the purpose of this contract, this contractor now would become subcontracting. And if it is a work contract between these two persons, section 194C would also applicable in this case. And again, the same concept, if this subcontractor is individual HUF, TDS 1%. If that is other, TDS would be 2%. So that is the main provision of section 194C. Now we are going to discuss the concept of section 194C in detail as per the provision. Payment to contractor and subcontractor, applicability of section. It provides for deduction of tax at source from the payment made to resident contractor and subcontractor. So the contractor should be resident also. Tax has to be deposited under section 194C by any person responsible for paying any sum to a resident contractor. So we are talking about the payer. In pursuance of a contract between the contractor and the, so these are the contractee we are talking about. So they are payer. So all these payer includes, except that individual HUF point that we are going to see in the last point. You can see individual HUF, only those included, those turnover exceeding 1 crore or 50 lakh rupees. So any person being an individual HUF, AOP, BOI whose has total sale gross receipt or turnover from the business or profession carried on by him exceeding 1 crore or 50 lakh in the preceding financial year. Only those individual HUF, AOP, BOI has been included. When to deduct? The same concept at the time of payment. Now the other section we have seen, or at the time of credit, whichever is earlier. The same concept is over here, accrual or payment, whichever is earlier. So the main things, who is the payer, pay, the limit exceeding which the TDS concept is going to be applicable, and the rate and the exception. These are the general short notes. First is income kind, like salary, interest on security. Then who is payer? If there is any exception, any payer or exceptional payer case. Then third one, amount of limit, if any there is. Then rate of TDS, and if there any special exception or exemption. So for the purpose of short note, you can consider these 5 points. And in short, you can make these short notes of all the TDS provision. Only in that case, you would be able to learn them very easily. Rate of TDS, as we have seen in the chart, it's 1% if the payee, that means contractor, is individual HUF, and 2% in case of other, even in same case of subcontractor. Now you can see the provision is here. There's an exemption if the contractor is of a transport business and if he furnished his PAN number. Also, in case of subcontract, in case of transport business, if he furnishes PAN number, then there is no applicability of TDS. We will discuss it in detail. Don't worry. So these rates we have already seen. Now the threshold limit is very interesting in this case. The threshold limit has been explained in two parts. If the single contract exceeding 30,000 rupees, then TDS need to be applicable. If the single contract is exceeding 30,000 rupees, then TDS is applicable. But suppose if the single contract does not exceed 30,000 from the same payer and payee, and if it is less than 30,000, then if the aggregate of those contracts exceeding 1 lakh, then TDS required to be deducted. Suppose there is a payer, Mr. A, and payee, Mr. B. So if Mr. A and Mr. B enter into a work contract of 40,000 rupees, then TDS applicable because it is exceeding 30,000. But if suppose A and B undertaking work contract, first work contract value was 25,000, no TDS. Second one contract is 25,000, no TDS. Third work contract in the same year is 30,000. Again, aggregate is still 80,000, no TDS. Now the fourth contract is suppose 25,000. Now you can see the aggregate is 1,05,000. So when this last contract has been executed, TDS is applicable and it would be deducted on full value. 1,05,000. Suppose the rate is 1%. Then 1,050 TDS liability would be there. And it's need to be deducted from 1,050. In the last contract, Mr. A will not pay Mr. B in the last case, in this value. He will not pay 25,000. Out of this 25,000, Mr. A deduct 1,050 TDS. And balance need to be paid to Mr. B. So this is the way how TDS need to be applied in case of section 194C. So you can see if the contract does not exceed 30,000, there would not be any TDS. But if this composite contract being split up into contract valued at less than 30,000 to avoid tax deduction. So what happened? When government made this limit of 30,000 for each contract, I am going to have a contract with Mr. B for 2 lakh rupees. So to avoid this TDS concept, I have split those contracts in 25,000 each. So there was no tax liability, no TDS concept I need to fulfill. So for that purpose, government amended the limit and it says 30,000 each. And if an aggregate exceeding 1 lakh, then you have to deposit the TDS. Required to deduct the TDS, the amount credited or paid is likely to be credited or paid to a contract or subcontractor exceed 30,000 in a single payment or 1 lakh in aggregate during the financial year. So even single payment does not exceed 30,000, but if it exceeds 1 lakh rupees, TDS need to be deducted. Here is an example illustration for you as your homework. Kindly go through it. Again, the same kind as we have discussed. You can see the first contract was 20,000, no TDS. The again was 25,000, no TDS. The again was 28,000, still no TDS. But on 1st March, it's 30,000. So now the aggregate limit exceeded. So because aggregate limit exceeded, then TDS required to be deducted from the overall amount, and that would be 1%, 1,030. Aggregate value is 1 lakh, Nidhi. It's not 10 lakh, it's 1 lakh. Okay, definition of work. What includes in the definition of work? Everything which is related to some kind of work, which includes advertising, broadcasting, carriage of goods, catering, any kind of that has been included, except manufacturing or supplying a product according to the requirement or specification of a customer by using material purchased from such customer or its associate being a person related to the customer in such manner as defined in section 40A2. So this is talking about job work. So if I am going to assign someone a job work for manufacturing of anything, and the material is going to be provided by me or by any person who is associated or nominated by me, that would be considered as work contract. But if a very interesting case is there, however, work shall not include manufacturing or supplying a product according to the requirement or specification of a customer by using raw material purchased from a person other than such customer or associate. This is the difference between the language. If the material is going to be purchased from the customer, like suppose Mr. A has asked to Mr. B to do some job work for Mr. A. And if the material has been provided by Mr. A, or Mr. A decided that Mr. B needs to purchase a material from some specific person, then this would be considered as job work. But Mr. A gives him job work to Mr. B, but the material purchased by Mr. B by his own. He will decide from where he is going to purchase the material. Then this will not form in the definition of work contract. That would be considered as sale of goods. So no TDS concept would be applicable. So this language, this line is very important. If the material purchased from such customer or its associate, then it would be fall under section 194C. But if the material purchased from a person other than such customer or associate, that would not regarded as a contract. That would be a normal contract for sale. No TDS would be applicable. However, this will not be applicable to contract which does not entail a manufacture or supply of an article or thing. It may be noted that the term work would include manufacturing or supplying a product according to the requirement or specification of a customer by using material purchased from such customer or its associate. So this is we are talking about when material is purchased from customer or associate. So we are talking about job work case. But in this case also, there is very interesting thing that TDS need to be charged on labor charges only or the material charge also. So let's discuss the job work concept. There would be two situations. Material purchased from customer or associate. Section 194C apply. Material not purchased from customer or associate. So that is 194C not applicable, except in case of construction services. Now in this case, there are two situations. We have supplied the material. We have directed how to or what kind of specification I need. Now in this case, invoice would be two types. Suppose the material purchased which we have supplied value is 5 lakh rupees and the labor charges value is 1 lakh rupees. So the job worker, the payee, asked us to pay 6 lakh rupees. So he sent invoice to the payer. We are the payer. So if the invoice is like this, then 194C is only applicable on labor charges. for the purpose of labor charges. So TDS is going to be deducted by the payer only on 1 lakh rupees, not on the full value of 6 lakh. Understood? If invoice has separately shown the labor charges and material charges, then TDS provision would be applicable only on that labor charges because 194C is on work contract. Suppose in this case, the invoice raised by the job worker is like this. 6 lakh. Labor charges has not been shown separately. So if the labor charges has not been shown separately, then 194C would be applicable on full value. Then TDS would be applicable on full 6 lakh rupees. So if the invoice shows the separate value of labor charges, TDS would be on 1 lakh. And if not, then the TDS liability would be on full 6 lakh rupees value. So this provision explains this concept. Non-applicability, we have seen in case of transporter, there was not applicability of section 194C. These three conditions you have to fulfill, and if these three conditions has been fulfilled, then the transporter, if they are contractor in a work contract, then TDS liability would not be applicable. If that transporter owns 10 or less goods carriages at any time during the previous year. Have you recalled something? That was section 44AE, presumptive taxation. And you can see the same is applicable on this kind of transporter who is engaged in the business of plying, hiring or leasing of goods carriages. And if he has furnished declaration to this effect, along with his PAN number, if he declare that I do not have own 10 or I have not owned more than 10 goods carriages in a financial year, and if I am engaged in the business of plying or hiring or leasing of goods carriages, and I am submitting my PAN number, then there is no applicability of section 194C in case of work contract of this kind of business. Meaning of goods carriages, you can read it. Important point. Threshold limit we have discussed. These are also your homework. You can read it. Because there's a huge topic and there are multiple points. So I'm just asking you to please go through these points. If there's any issue, you can ask me in the next class. We will discuss it. But if we are going to discuss each of these kind of procedural point or simple points, so we would not be able to discuss the technical point in detail. Illustration 4, certain concessions are granted to transport operators in the context of cash payment of section 40A3 and TDS. So of course, section 40A3 is for PGBP, in which in case of transporter, we can pay 35,000 rupees in a day to a same person in cash. And under TDS, if the goods carriages is not more than 10, and if he is submitting PAN number, then TDS provisions are not applicable. This is a simple question. Now section 194H. This is for commission or brokerage. These are general terms, commission and brokerage. Let me see if there is any query. Yes, same in PGBP. So somebody was a lot of students were asking, सर याद कैसे करेंगे, सब चीजें बहुत डिफिकल्ट होगी. चलो एक छोटी सी बात बताता हूं मैं आपको हिंदी में. एक एनिमल होता है बाइसन. बाइसन एक एनिमल होता है और वो बहुत ही ठंडी जगह रहता है जहां बहुत सारे स्नो स्टॉर्म्स आते हैं, बर्फ के तूफान आते हैं. तो वो एक ऐसा एनिमल है कि जब भी स्नो स्टॉर्म आता है, ट्विस्टर आता है, तो बाकी सारे जो एनिमल हैं वो अपोजिट डायरेक्शन में भागते हैं, उससे दूर भागते हैं. एंड व्हाट बाइसन डज, बाइसन उसके अगेंस्ट में भागता है, वो उसको क्रॉस करता है. तो उसको पता होता है कि अगर मैं इससे दूर भागूंगा इस स्टॉर्म से, तो लेटर और सूनर दिस स्टॉर्म विल कैच मी. एंड जब मैं भागूंगा तो आई वुड नॉट बी एबल टू ब्रीथ प्रॉपरली एंड उस स्टॉर्म में आकर मे बी आई विल डाई. सो व्हाट ही डज, वो उस स्टॉर्म को क्रॉस करता है. बाकी सारे एनिमल भागते हैं लेकिन वो उसको स्टॉर्म को क्रॉस करता है. और वो उस वजह से, बिकॉज स्टॉर्म उसकी तरफ आता है और वो उसे क्रॉस करता है, तो वो उसे जल्दी क्रॉस कर लेता है, दैट्स अ वेरी डिफिकल्ट थिंग, बट वो उसे क्रॉस कर लेता है, और एक बार क्रॉस कर लेता है तो ब्रीदिंग इश्यू और बाकी सारी प्रॉब्लम सॉल्व हो जाती है. So you have to think like that. The CA profession is not easy. This studies, of course, I believe it's not that easy. It needs a lot of sacrifice and hard work. But if you decide that I have to do it, थोड़ा ज्यादा पढ़ना पड़ेगा, थोड़ा ज्यादा फोकस करना पड़ेगा, एंड थोड़ी सी ज्यादा प्लान करनी पड़ेंगी आपको अपनी चीजें. एंड इफ यू आर एबल टू डू दैट, यू आर डेफिनेटली गोइंग टू क्लियर इट. एक ठीक प्लानिंग करो, एक सोचो कि टिल द एंड ऑफ जून और टिल 15th ऑफ जुलाई मेरा कितना सिलेबस कंप्लीट हो जाएगा. लाइक टिल 15th ऑफ जुलाई, आवर लास्ट क्लास इज ऑन 15th ऑफ जुलाई ऑफ टैक्स. So do not wait for 15th of July. You should start revising income tax, your GST and your other chapters also, or other topic also. Maybe आपको थोड़ा टाइम इंक्रीज करना पड़े. 6 and 7 hour के लिए sleep, it's I guess more than enough for this kind of work. And if you are able to give your 10 or 12 hours for study, I believe in a month आप बहुत कुछ अपना कंप्लीट कर सकते हो. एंड प्लीज, जब कोई फैकल्टी आपको ये कहता है कि शॉर्ट नोट्स बनाओ, चार्ट बनाइए, आरटीपी एमटीपी इज वेरी 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 इंपॉर्टेंट. आई एम अगेन सेइंग दिस थिंग. प्लीज सॉल्व ऑल क्वेश्चन ऑफ स्टडी मटेरियल, टेस्ट योर नॉलेज, आरटीपी एमटीपी सब करो. उसमें से काफी कुछ एग्जाम में रिपीट हो जाएगा. So please do it, and I believe you will be able to clear this group in this attempt only. So commission and brokerage we were discussing, applicability and rate of TDS. Any person other than, again, the same individual HUF. An individual HUF included if the turnover exceeding 50 lakh or 1 crore, same concept. Who is responsible for paying any income by way of commission other than insurance commission? Why insurance commission is not included? Because for that purpose there is separate section, section 194D, that we will discuss. There is one more commission, that is lottery commission. For lottery commission also not include a section 194H, it is under section 194G, that we will discuss later. So this is other than lottery commission and other than insurance commission. All other commission will fall under section 194H. Or brokerage to a resident shall deduct a TDS at the rate of 5% till 30th September, and on or after 1st October it's 2%. This point we have discussed. Time of deduction same, accrual or payment whichever is earlier. The threshold limit is 50,000. Now tell me what is difficult. This is commission. Threshold limit 15,000. Meaning of commission brokerage, you can just read it, otherwise you already know what is the meaning of that. The most important thing is the non-applicability. The exception. Rate is 2%, 5%. Amount is 15,000. We are talking about commission and brokerage. There are some exceptions that we need to go through it. This section is not applicable to professional services by a CA, doctor, etc. Why? Because for that section 194J is there. So if any kind of services has been provided by a professional person, that will not fall under section 194H. Okay. Now, applicability of TDS provision on payment by television channels and publishing houses to advertisement companies for procuring or canvassing for advertisement. There are two types of payments involved in advertising business. Payment by client to the advertising agency. If payment by client to the advertising agency, that is liable to TDS. Payment by advertising agency to the television channel, newspaper, company, that is outside TDS provision. Let me make it simple for you. I will divide this advertising provision in three parts. The first one, if payment made by client to advertising agency, TDS would be applicable. Clear? The second point, payment by advertising agency to television or media company? No TDS. And the third one, media company or television payment to advertising agency. No TDS. So if payment by client to advertising agency, that is liable to TDS. If any payment by advertising agency to television or media or vice versa, that is not included for the purpose of TDS provision. Okay. So on the basis of these 3 points, kindly go through with this concept. This also. Here is an example also, that's for your homework. If you will read the above concept and if you will solve this example after that, you will able to understand what was the exact provision. Now section 194I, and that is for rent. Rent is a very common word. We all know about that. What is the meaning of rent, etc. So rent is also chargeable for TDS. Priya Mishra is saying, what is insurance commission? If I am an insurance agent, okay, and I am doing policies for different clients, so I will get the commission from insurance company. So that is called insurance commission. Simple. Nidhi is saying this line explain in Hindi. Which line, Nidhi? Which line you are asking me to explain in Hindi? Batao. Which line we are talking? I will explain in Hindi. If you will tell me which line you are talking, I will explain that in Hindi. Okay. Television. अच्छा. देखो टेलीविजन की लाइन का हिंदी ये है कि अगर आप कोई एडवर्टाइजिंग एजेंसी की बात करते हैं, तो अगर आप एक क्लाइंट है और आप किसी एडवर्टाइजिंग एजेंसी को पैसे देते हैं अपने एड बनाने के लिए एक्सेट्रा के लिए, तो उस पर टीडीएस चार्ज होगा. ठीक है. एडवर्टाइजिंग एजेंसी पेमेंट करती है किसी टेलीविजन चैनल या न्यूज़पेपर को, उस पर टीडीएस चार्ज नहीं होगा. एंड वाइस वर्सा, टेलीविजन चैनल या न्यूज़पेपर किसी एडवर्टाइजिंग एजेंसी को पेमेंट करते हैं, उस पर भी टीडीएस चार्ज नहीं. तो आप एक बार इस प्रोविजन को पढ़िएगा, फिर इस इलस्ट्रेशन को एक बार सॉल्व कीजिएगा. उसके बाद भी अगर कोई कंफ्यूजन होगा तो नेक्स्ट क्लास में मैं आपको सॉल्व कर दूंगा. ठीक है. चलो, नाउ वी आर टॉकिंग अबाउट रेंट, applicability and rate of TDS in case of rent. Any person other than individual HUF, again the same concept, payer should not be individual HUF, but that individual HUF whose turnover 1 crore exceeding 50 lakh in previous year 23-24, that has been included. Rate of TDS is 2% in respect of rent for plant, machinery or equipments, and 10% in respect of other, whether it's for land or building or factory building, etc. So if we let out plant or machinery on rent, then TDS rate would be 2%. Otherwise, it would be 10%. Time of deduction, same copy paste, accrue or payment, whichever is earlier. Threshold limit is 2,40,000. No deduction shall be made where the amount of such income or aggregate of the amount of such income credited or paid or is likely to be. So you can see till now the highest limit of TDS is in case of rent, that is 2,40,000. Credited or paid the financial year to the account of the paid does not exceed 2,40,000 rupees. 2,40,000. Clear? What is the meaning of rent? Rent means when you have right to use anything, whether it's under any lease, sublease, tenancy, or other agreement or arrangement for the use of. So if you have right to use any land, building, machine, plant, etc., and against that use right, whatever you are paying, that would be considered as rent. Now, a very interesting question. Let me ask you that question. Applicability of TDS provision under section 194I to payment made by the customer on account of cooling charges to the cold storage owner. So generally what happens, a farmer deposit his agricultural produce in a cold storage. For that deposit of agricultural produce in a cold storage, the owner of cold storage charge rent. So in this case, who is the payer? He is the payer. He is going to receive the rent. He is the payer. So the question is whether the rental charge or any other payment made by a farmer to the cold storage owner for the warehousing of his agricultural produce, whether that charges are as rent. If yes, TDS would be deducted in section 194I. So what do you think? This rental charges would constitute as rent or not? Nidhi is asking in all cases previous year 23-24 hoga, sir. Yes, in all cases. Do not worry. In those section, this individual HUF case has been mentioned. I will make a diagram in the next session. I will show those section. In those cases, you have to see that whether that is individual HUF was included or not included. सबलीज क्या होता है सर? सबलीज जैसे सब कॉन्ट्रैक्ट होता है. मैंने अपना घर किसी को रेंट पे दिया निधि, तो वो हो गया लेट आउट. जिसको रेंट पे दिया उसने उसे किसी और को रेंट पे दे दिया, तो वो हो जाता है सब लेटिंग. तो वेदर रेंट आपको लीज में आए, रेंट में आए, वेदर सब लीज में आए, वेदर सब रेंट में आए, in both cases TDS would be applicable. Rajveer is saying no. Tanu saying I think no. Nidhi is saying yes. Julie is saying for pay it is rental income. Ishan is saying no, it is not as rent. No as agricultural produce. Yash is saying how agricultural produce has been make a difference in this. Yash. Tanu is also saying because it is an agricultural produce, I guess not rent, sir. Soumya is saying no. Soumya is saying also no. No. The correct answer is, of course, no. Because rent means you have right to use something. If you are a tenant in any property, then you have the right to use that property. If you have taken a machine on rent, then you have the right to use that machine. But in case of warehousing, you need to give your agricultural produce to the warehouse keeper. He will store according to his plan, and you do not have any right for access and to reach to those agricultural produce. So this is not rent, and TDS does not require to deduct under section 194I. But TDS is applicable in this case under section 194C. Because there is a work contract. We have given a work to the warehouse keeper to save our agricultural produce in his warehouse. So section 194C is applicable in this case because that is a kind of a contract of depositing the agricultural produce, but not rent actually. So circular 10th January 2008 provides clarification regarding applicability of provision of section 194I to payments made by the customer on account of cooling charges. The main function of cold storage is to preserve perishable goods. Means of a mechanical process, the storage of such goods is only incidental in nature. Now the main thing is this. The customer, that means the farmer, is also not given any right to use any demarcated space or place or the machinery of the cold storage, and thus does not become a tenant. So the farmer is not a tenant. Therefore, 194C is not applicable. 194I is not applicable, but 194C is applicable. The same case in case of no requirement to deduct tax at source under section 194I on remittance of passenger service fees by an airline to an airport operator. So the airline agency paid to the airport operator a fees that is called PSF, and that is also not included under section 194I. That is for using of airport by their passenger. Applicability of TDS provision under section 194I to service tax component of rental income. Now this service tax has been replaced by GST. Now the question is here like this. Suppose there is some rental income of 1 lakh rupees and GST is 18%. SGST, IGST, CGST, and total payment is 1,18,000. Okay. So if the TDS is going to be charged, the TDS would be applicable if it is exceeding 2,40,000. But suppose if TDS is going to be applicable in this case, then TDS would be charged on 1 lakh rupees or 18,000 rupees or 1,18,000. This is the question, that whether the GST or service tax component is included for the purpose of charging TDS or not. You have to think about it and give me the answer. Whether GST or service tax component would be the part of your TDS deduction amount or not. So you have three options. In this case, either TDS need to be deducted on 1 lakh or 18,000 or 1,18,000. Arshada is asking, sir, threshold is 240 for 194I is applicable or from 2,40,001 rupees. Threshold means up to that limit, no applicability of TDS. So if it is exceeding 240, then TDS would be applicable. Priya Mishra is saying 1 lakh. Yash is saying no, not. What is no, not? I'm just requiring the answer. 1,18,000 or 118. And the correct answer is, of course, 1 lakh rupees. So the service tax component or GST components would be outside the purview of TDS. So only on 1 lakh rupees, TDS need to be deducted. So that has been explained. This simple thing has been explained in this full paragraph. You can go through it. And again, in the clarification, the same thing has been explained again. Clarification on applicability of TDS provision of section 194I on lump sum lease premium paid for acquisition of long-term lease. So if you pay any lump sum lease premium, that is outside the purview of TDS. That is not a rental income. The issue whether or not TDS under section 194I is applicable on lump sum lease premium or one-time upfront lease charges paid by an assessee for acquiring long-term leasehold right for the land or any other property has been examined by the CBDT. Accordingly, CBDT wide the circular. You can go through it. Lump sum premium is outside the purview of TDS applicability. That is not a rent. This illustration number 6, you can solve yourself. That is a homework for you. Now section 194IB. So section 194IB, you can see section 194I was not applicable for those individual HUF. Those turnover is less than 1 crore or less than 50 lakh in preceding previous year. So if you are an individual whose turnover does not exceed those specific limit, and if you are paying rent, then TDS applicability is not for you under section 194I. But a new section has been made for those kind of individuals or HUF. So if you are an individual HUF whose turnover exceed 1 crore or exceed 50 lakh in previous year 23-24. And if you are paying rent, then section 194I will apply. But if you are an individual HUF whose turnover is less than 1 crore, less than 50 lakh in previous year 23-24, then 194I is not applicable, but a new section has been emerged, and that is section 194IB is going to be applicable. And if you fulfill the condition of section 194IB, then you need to follow the TDS provision also. So this section is only for those individual HUF. Those are not covered under section 194I. Section 194IB require any person being individual HUF other than those individual or HUF whose total sale, gross asset or turnover from business or profession exceed 1 crore in case of business or 50 lakhs. So we are covering other than those individual HUF, those turnover exceed 1 crore. Why? Because these has been included in section 194I. So if your turnover exceed, you would fall under section 194I. If it does not exceed, you would fall under section 194IB. तो मतलब कोई नहीं बचा. All individual HUF covered, whether under section 194I or it under section 194IB. In the financial year immediately preceding the financial year in which such rent was credited or paid, responsible for paying to a resident any income by way of rent, to deduct TDS at the rate of 5% up to September, and from October the rate is 2%. So both pair has been included. But the limit was under section 194I was 2,40,000 aggregate limit. But section 194IB would be applicable if monthly payment exceeding 50,000 per month. Let me tell you, it does not mean that you will understand it like 6 lakh rupees in a year. No, there is no 6 lakh rupees limit has been there. If your rent is exceeding 50,000, then 194IB would be applicable. Suppose my rent is 60,000 per month and I reside only for 3 months. I paid 60,000 per month every month. So TDS would be applicable. Even if the aggregate is only 1,80,000. But 194IB does not talks about aggregate amount of rent. It talks about if it is exceeding 50,000 per month, TDS would be charged. 194I is for aggregate limit, but not section 194IB. Under this section, tax has to be deducted at source only if the amount of such rent exceed 50,000 for a month or part of the month during the previous year. Now the new thing, in section 194IB, the time of deduction is not accrual or payment, whichever is earlier. The time has been changed. The deduction is to be made at the time of credit of such rent for the last month of the previous year. So suppose I am residing in a property and my rent is 60,000 per month. And I started residing in that property from January 2025. In January, I paid 60,000. In February, I paid 60,000. In March, I am paying 60,000. So TDS required to be deducted at the end of the last month of the previous year. So even it is 60,000 in January, in February, but TDS required to be deposited in the month of March, in the last month of previous year or the last month of tenancy. Support, I start residing in January and I vacate that property at the end of February. So if you vacate that property, then in the month of vacancy, you need to deposit the TDS. If the property does not vacate, then always at the end of the year. But if the property has been vacated, then TDS need to be deposited at the last month of the tenancy. If the property is vacated during the year, as the case may be, to the account of the payee or at the time of payment thereof in cash or check, whichever is earlier. Clear? No requirement to obtain 10. If you fall under section 194IB, then you do not need to take tax deduction account number. What is tax deduction account number? You need to file TDS return. In all other cases, section 194A, if you fall, 194IA, 194I, 194C, etc. You have to take a 10 number to deduct the TDS. you have to deposit TDS return also as a payer. But if you fall under section 194 IB, then you just need to deposit the TDS, not required to file any TDS return. So that's why you need not to obtain 10 number. Meaning of rent same as we discussed in the last case. And this is very important. Deduction not to exceed rent for the last month. From this point, we are going to discuss this topic in the next session. If you have any query, you can ask me, students. We will continue from section 194 IB last point. Okay, remember, please, whatever I have asked you for reading and homework, please do it. And if there's any query, you can ask me. Nidhi is asking, what is difference between section 194I or 194IB? Nidhi, I have explained it. 194I is applicable to all person, but individual HUF only those cover those turnover exceeding 1 crore or 50 lakh in the preceding previous year. So if you are an individual or HUF and your turnover does not exceed 1 crore or 50 lakh and you are paying rent, then you are not included in section 194I, but for those individual HUF, section 194IB has been made. So your would be included under section 194IB, not under section 194I. So the difference is just on the basis of payer. If you are that individual HUF, turnover not exceeding, you would fall under section 194IB, else you will fall under section 194I. Sahil Kumar is asking, please explain who is contractor, contractee in terms of payer and pay. Okay, pay is always that person who received the income. Okay, Mr. Sahil, pay is the person who is receiving the income. And payer means who is paying that amount, expenditure. Suppose you hire a contractor for construction of your house and you are going to pay that contractor. Clear? So you are a payer. You are a payer and you are going to pay to whom? Contractor. So contractor is receiving the income. So he would be called payee. And you are going to pay him. So you would be payer and you would be called a contractee. Don't try to rhyme it. That contractee payee. No, that would be opposite in this case. So contractor is payee because he is receiving the amount. And contractee is the payer because he is expend or incurred those expenditure. Okay, now next is Nidhi is less than wala 194 IB or more than wala 194. Very good, correct. Less than wala 194 IB है और जिसका टर्नओवर कम है वो 194, जिसका टर्नओवर ज्यादा है वो 194 आई में जाएगा. Sahil Kumar, I have just given you the example. Mr. Somesh, actually point number 4 is saying you are not need to obtain 10 number. Because you are an individual HUF, those turnover does not exceed 1 crore or 50 lakh rupees. So department has given you the benefit that you just need to deposit the tax, but you need not to comply any other thing. So that would be good for you. You need not to file TDS return, etc. You need to deposit the TDS only. So no requirement of obtaining 10 in this case. In all other cases, section 194I, 194C, 192, 193, 193A, 194A, you have to obtain 10 number and file TDS return. You would be able to understand this concept when we will discuss the return filing procedure of TDS. Priyanshi is saying, for understanding, we can say payee as seller and payer is buyer. Who will pay tax? No, we do not need to understand it like that. Pay is that person who received the income. And payer is that person who pay the expenditure. In case of tenant, you can understand. If I'm a tenant I am the person who is going to incur expenditure. So I would be payer. And the landlord would be the pay because he is going to receive the rental income. So that is very simple, very common thing. Contractor treat as pay or contractee treat as payer, right, sir? Yes, absolutely right, Nidhi. Any other queries, student? No query on portal also.
Sir, I want to add something.
Yes, yes.
In this regard, student 190 for I and IB, that in the limits of 1 crore and 50 lakh, that is in respect of individual and HUF only. So don't get confused for other assessees. Because all the other assessees are covered under 194I. Only for individual HUF, you have to see whether it's less than 1 crore, equal to or less than 1 crore, or exceeding 1 crore or 50 lakh in case of profession. Second difference is, students, that if you see under section 194I, it is rent for everything, for land and building, for your furniture, your machinery, fittings, everything. But under section 194IB, it is only for land or building or both. So suppose there's an individual who is giving the rent for furniture or for machinery for business or something, and his turnover does not exceed 1 crore, then he will not fall under 194I because it's less than 1 crore, and he would also not fall under 194IB because that section is applicable only in respect of rent for land or building or both. So this is the second difference, students. Any other queries, students? Because sir has taken, I guess, all the queries till so far, that your contractor, contractee, payer, payee. I know it's difficult a little bit to just remember who is payer, who is paying, then contractor, contractee. Then in TCS, we have to understand who is the collector, who is collectee. Then there are many terms. But if you see, students, payer means the person who is paying. Payee is the person who is receiving, like a giver or taker. So it's a simple term for that. So who is going to pay? Definitely he has to deduct before paying the amount, and the person who is deducting is the person from whom you are deducting the amount, and balance he will receive. And in this student 194 IB, definitely sir will take the questions in the next session, because one important thing that will be covered in the next class. But wherever in any section there is a amendment regarding the TDS rate, that is from 1st October 2024. But you have to be very careful about the point of deduction of TDS, because that you have to see whether the old rate, the rate that is pre-amendment, will be applicable or post-amendment. You will understand this better in 194 IB, because that makes a lots of difference, the point of deduction under section 194 IB. So definitely these things you have to keep in mind. Suppose you have credited the amount before 1st October, like on 30th September, or you are paying in October. So the point of deduction is whichever is earlier. So on 30th September, you have to deduct the TDS. So on 30th September, what was the rate, that applicable rate, you have to deduct on that. So you have to see very carefully the point of deduction of TDS. Pawan is asking something. Illustration 1 क्वेश्चन हिंदी में समझा दीजिए ना मैम. 7,54,100 कैसे आया? I guess he is asking.
Is it calculation of tax पूछ रहा है मैम वो actually, and that is on
Non perquisite.
optional tax regime से calculate किया है tax. That was simple calculation.
Okay. 1 second. Soumya, 194 IB covers only renting of land and building. Yes, Soumya, because whatever the sir has gave you as a homework, don't ignore that portion. Just read. Sir has given you as the homework, so don't leave that portion. If you see the definition of rent under section 194 IB, it clearly states that rent for the purpose of 194 IB is that the amount which you paid under any lease, tenancy, or any other agreement, arrangement for the use of any land or building or both. ITR filing is started for financial 24-25. What do you think we should involve in processing of ITR filing helpful for exam, or it will be backfire in respect of exam? Student, for ITR filing, that is a practical thing. If you want to just test all whatever you have learned in these classes, you want to practically see. But there might be, because what happened now, practically there's a difference between what you read in the as per the provisions of the law or as per the return filing. Yeah, definitely at some point of time it will be better for your understanding. If you try to file return of income, you will understand the key, how you did claim the deduction, what are the things are there. But for your exam purpose, if I'll say for return filing, the tax will be automatically calculated. You don't need to calculate the tax because it's auto calculated. But for your examination, definitely you have to compute by yourself. So return filing is going to help, but that is not solving your purpose for the examination, because at that point of time you have to claim each and every amount. You have to calculate by yourself tax liability, HRA. Otherwise, in the ITR portal, it will be auto-populated. If you put the amount there, then calculation will be done by the utility, not by yourself. But in the examination, you have to do the calculation by yourself. Pawan, okay, 75,400 के लिए I will be taking a MCQ in the next class, because abhi only certain sections are covered. Then you have advanced tax, TCS, many sections are covered there. So definitely for your tax on non-monetary perquisite, I will take a MCQ ki how to compute. That point of time, I will take this your query of illustration one.
मैं इसको बता देता हूँ अभी एक just it will
No,
take
sir.
just 1 minute. I'm just going to explain it. Pawan, let me show you. It was income of 8 lakh rupees. In that question example, the income was 8 lakh rupees. There was nothing difficult. The income was 8 lakh rupees, and we just need to calculate tax as per optional tax regime. So under optional tax regime, up to 2,50,000, the tax would be nil. Fine. The next 2,50,000, the tax would be at the rate of 5%. So 5 lakh has been covered. The next 3 lakh rupees remaining, the tax would be at the rate of 20%. So calculate this tax, Pawan, and on this tax, 4% cess you need to applicable. So that would be 75,400. We have discussed this thing in the basic concept, Pawan.
Yes, yes.
I ask you that this 8 lakh rupees calculation of tax as per optional tax regime. So this is a normal calculation. There's nothing special we have to calculate.
Yes, sir. By this time, students, the slab rate should be on your tips. Ki what is the slab rate for optional regime and what is the slab rate for default tax regime? And you should know ki, like, suppose if I'm saying ki it's 8 lakh, so instantly 8 lakh minus 5 lakh, 20% plus 12,500. You should know that if it is exceeding 5 lakh, then 12,500 you have to add after 20%. So all these tricks you have to know, because that will definitely save your time in the examinations. So by this time, you should be aware of your all tax rates, and you must have done so much practice that there should not be any difficulty in computing at least the basic tax liability. Any other query, students? Jitinder is asking partners capital interest paid taxability. Partners capital you are saying 75,000, interest paid 12,000. ठीक है 40B. If I'll see 40B, instantly it should come in my mind ki only up to 12%. If it is allowed as per the partnership deed, maximum 12% is allowed. So 75,000 pay, if you do the 12%, student, it will be 9,000. So 9,000 is allowed as deduction in the hands of firm. So 9,000 will be the income of the partner. Then received is taxable as a business income. No, I'm not getting your query, Jitendra, because I told you 75,000 it is a capital, then 12% up, if it is allowed by the partnership deed, then 12% up to 12% will be allowed as deduction in the hands of firm. So it will be 9,000, and 9,000 only will be deemed will be the income of the partner, not the complete 12,000, because for 3,000 deduction has not been allowed to the firm. So there will be no double taxation. Pawan is saying no. Pawan, I don't know in which regard you are saying no. Okay. Okay, sir. So,
Okay, ma'am. No more query at my side, ma'am. So we can close
yes,
the.
sir. Okay, students. Good night. Good night, sir.
Good night, ma'am. Good night. Thank you so much.
Yes.
Yes.